Hello everyone. This class is all about revision of IBC 2016. It's going to be in as fast manner as possible, of course, without compromising on the concept so that you actually find it an effective revision. Without wasting any more time, let me begin with the revision. I have my handwritten charts of this chapter with me. If you want the same, they are available, of course, free of cost for all of you. Just to ease in your preparation, how can you get them? That you will find in the description, right? Okay, so let's start with the chapter. Insolvency and Bankruptcy Code 2016. First of all, it involves two terms, that is insolvency and bankruptcy. What do we mean by these two terms and why at all code is used? See, it has a wide application and it includes a lot of content, a lot of acts were repealed, a lot of acts were amended. Okay, and after that, this particular one unified law has been made with respect to insolvency and bankruptcy. Okay, so that's why the use of code instead of acts, as it involves a lot of aspects in one unified law. Now, what do we mean by these two terms, insolvency and bankruptcy? Right, because it is a code about the two terms involved over here. So, for to understand that, insolvency is a state. Okay, insolvency is a state. We all know, we have been as commerce students preparing balance sheet for years, right? And every time we prepare balance sheet, we know that we have certain set of assets and certain set of liabilities. That is for any entity that we are making the financials of, as in a normal common parlance, that for each one of us, like if I talk about me as a person, I might have certain assets and I also might have certain liabilities. Say for example, I have a house and I have a bank loan. Okay, so supposedly I bought a house at 2 crore rupees and my loan is somewhere around 1 crore rupees. Now slowly what happened, that the house price, maybe for certain reasons, it declined and came up to 50 lakh. I have no bank balance and I have to repay a loan of 1 crore still. That means my assets can realize only 50 lakh, whereas I have to pay an amount of 1 crore to the bank. So my liabilities exceed my assets. So this is a state, this is a position where I am in right now. I am in a position where my liabilities are more, whereas my assets are less. Right. So this is called as a state of insolvency. This may be for a company, for a non-company, for a partnership firm, for an individual, for any entity, any person. Right. So this is applicable in everyone. Now, I know this particular state of mind. Nobody else knows it. Supposedly, I defaulted in the repayment of my loan to bank. I had to make the payment of an EMI and I did not pay that. Now the bank knows that there is some issue why Shivangi is not paying our installments in time. So now the bank gets concerned and bank comes up to me. We have discussions like things. Now instead of constant repetition, reminders, I am still not being able to repay bank loan because I don't have money, right? So what bank can do now? What can bank do now? What can bank do now? Now bank can initiate some proceeding against me. So bank can go to some person and bank can say that Shivangi is not in a very well state. She is in a state of insolvency. What we should do is we should bring her out of this insolvency. How? Maybe there is some way, maybe her business is not going so well, so we can provide her ways, we can talk to her creditors, like to provide some credit, etc., etc., and we can bring her out of that insolvency state so that she comes back in the normal position and repay my loan. And what if she cannot come out of that insolvency state? Then we should sell her house, whatever assets are available with her, and whatever loan amount can be repaid, I want my money back because I cannot take further risk. So bank wants someone to listen to this situation. Earlier also there were rules, there were authorities, there were laws, but not so uniform and not so well defined. IBC has made this process absolutely clear, and utmost ease has been provided in this regard. So one by one we will try to understand that. Okay, so insolvency is a state, is a position, and now what happens is the person goes to some authority, the person tries to resolve my insolvency. If it cannot be resolved, then the court will declare me as bankrupt and all my assets will be sold and my liabilities will be paid off, because I am an individual. I am an individual. Right, I have a chart over here which is going to help us realize. Please mark my words and keep this in mind. This is just a revision lecture, so I'm not going to explain you every step by step. This is just an introduction. So I'm trying to give you the brief idea, not of course in the most in-depth manner that I take up in the classes. Okay, so this is just a revision class and you are only going to get an overview of the same. So insolvency, my dear, is a state where your assets are lesser than your liabilities. If you go ahead and treat the state of insolvency, that means you can resolve this insolvency, nothing better than that. And this particular code endeavors to do that only. Liquidation is a very trivial or a very small part of this particular code, because its emphasis is to revive the person from the state of insolvency. Okay, so insolvency, if it is treated, nothing better than that. If it is untreated, then if you leave it like that, or it cannot be treated for some reason, then it may lead to bankruptcy for non-corporates that I spoke to you about, and for liquidation for corporates. Now, what do we mean by liquidation? Insolvency is a separate term, bankruptcy is a separate term, and what do you mean by liquidation? These three terms are separate, different terms. Liquidation is nothing but the process of winding up. And what is winding up? See, winding up, liquidation, dissolution, again so many terms. So dissolution and liquidation are different terms. Liquidation means winding up. And what is winding up? Winding up means sale of assets to pay off liabilities. Only that particular process is. Now when you want to remove the existence of the company, the company was incorporated, then there is a register of companies in which the name of company is mentioned. That means company has a separate legal entity, company has its own existence. We dissolve that existence pursuant to liquidation. Clear? I hope you have got this basic idea. Now listen to me very carefully. Listen to me very carefully. Let's take an example. Let's take an example before I make you understand anything else. There is a company. A company means a corporate. Of course, I hope you all know what is corporate and what is non-corporate, right? So corporate, LLP, company, they all will come under corporates only. So there is a company that is a corporate. The company has taken a loan from a bank. The company has taken a loan from a bank. Now supposedly the company defaults in payment, in repayment of this loan. Company defaults in repayment of this loan. This bank will realize that there is something wrong. So bank can move an application to the appropriate authority, and appropriate authority will initiate the insolvency resolution process. That means they will try to resolve the state of insolvency of the company. If that cannot be done, then the relevant authority will pass the order of liquidation. That means they will say that sell off all the assets of the company and pay off its liabilities. So wind up this company. The company cannot no more function, cannot function anymore. Wind up this company and dissolve its name. You get my point? You get my point? So first endeavor is to resolve the state of insolvency. If that cannot be done, then liquidation happens. We have two set of people in this particular code. One is corporates and other is individuals, partnership firms and like, right? So we have to read about corporates only. So we will read corporate insolvency resolution process. Corporate insolvency resolution process, for which we need to know three basic terms: corporate debtor, financial creditor and operational creditor. Company or LLP, whatever the case may be, this is a corporate and it's a corporate debtor because it has taken some money. If it has taken a loan from a bank, that means bank has helped in its finances. The bank has helped the company in its finances. So of course it is a financial creditor. If a person has supplied goods to the company and the company is unable to make payment for that, company has taken some goods on credit, the company is unable to make payment for that, the person has helped in the company's operations, it is an operational credit. If the company is unable to pay the salary of employees are operational creditor or financial creditor. They will be considered as operational creditor. Why? Because they have helped in the operations of the company. Okay. If supposedly company has taken loan from some employee, now that employee has helped in the finances of the company, so that employee in that particular capacity will be treated as financial. You get my point, right? You should know all these. We are just revising. So these are basic parties that you must have an idea of. Okay. Now if we talk about this particular code, it has repealed 2 acts and amended many laws. It came into force on 28 May 2016. If you talk about it, was introduced in December 2015 in Lok Sabha, then of course in May 2016 in Rajya Sabha. It was first passed in Lok Sabha, then passed in Rajya Sabha. It got assent on 28 May 2016 and was notified on the same day. Now, under this particular code, we have an authority, or you can say we have a board, which is Insolvency and Bankruptcy Board of India. It is IBBI, which is commonly known as board. So throughout the act, wherever board is written, it does not mean your board of directors of a company. It means IBBI. Clear? Now, this IBBI, who has established IBBI? Central government has established IBBI to oversee the whole proceedings under IBC. So it is the authority which is governing everything under IBC. Okay, that means, ma'am, if supposedly a company has taken loan from a bank and the company is unable to repay the loan, the bank is going to move to IBBI and make an application? No, my dear. Under IBBI also we have authorities. We have read about National Company Law Tribunal under Companies Act, NCLT. That is going to be the adjudicating authority for the corporates under IBC. For the corporates under IBC, that is relevant for you. That is something that you must know. IBBI, of course, is a board which is going to oversee whole thing. Its head office is at New Delhi. But that is not the adjudicating authority. That is the supreme authority, you can say. Okay. So, adjudicating authority is NCLT. So, I might say NCLT, I might say adjudicating authority. Whatever I am saying, they both mean the same for corporates under IBC. Okay. Now, this particular code is divided into 5 parts. It has 12 schedules and of course, all the chapters are divided, all the parts are divided into different sections. What is relevant for us? Listen to me very carefully. Part 2. Part 2 is for corporates. So part 2 talks about treating the insolvency state of corporates, and if it cannot be treated, then going for liquidation. That is what is covered under part 2 of the code. Okay, so part 2 has its own definitions also. It has the whole process. CIRP stands for Corporate Insolvency Resolution Process. Liquidation, fast track CIRP, voluntary liquidation. That means there is no one who has made an application. The corporate debtor himself wants to liquidate on certain grounds, so they can go for voluntary liquidation. Then about adjudicating authority, offences and penalties. So all this is covered under part 2. All this is covered under part 2. Clear? Part 1 is preliminary, which tells us about the title, application and certain definition. Now the definitions which are given under part 2 apply to the whole IBC, but the definitions which are given under part 2 will apply to only part 2. This is very obvious. I hope you all know that, right? Okay, so these are the basic structure, you can say. One important thing, the provisions for insolvency and liquidation of corporate debtors shall apply only when the minimum amount of default is 1 lakh. The government can go up and prescribe this amount up to 1 crore, and the government has actually prescribed the amount to 1 crore. So supposedly company has taken a loan of 20 lakh rupees and company has not repaid that loan. Can bank go and make an application under this code for recovery of money? No. The minimum default amount has to be 1 crore. The minimum default amount has to be 1 crore, only then. Otherwise, the IBC will be flooded with applications, right? And it will be very difficult for them to manage the same, right? So the amount earlier, it was 1 lakh only. So 1 lakh, what the authorities realized that they have a lot of applications flowing. So it became difficult for them to manage. So now the amount has been increased to 1 crore. Yeah. Now, let's talk about the whole overview of CIRP. A basic structure, idea we'll get, and then we will start one by one. So basic thing is commitment of default, and that too minimum amount default has to be 1 crore. If there is existence of default, then application may be filed with adjudicating authority. Who is the adjudicating authority? NCLT for corporates. So either our financial creditor can go and file the application, or the operational creditor can go and file the application, or the company itself, that is the corporate debtor itself, can go and file the application. So any of them can file an application with adjudicating authority that we want to resolve the state of insolvency. See, we cannot directly go for liquidation, because attempt will be not to suppress the business houses. The attempt will be to revive the business houses. If at all they cannot be revived, then to liquidate them, right? So existence of default, at least compliance with the minimum amount of default, and application with adjudicating authority. Now what happens? There has to be someone who is going to undertake the whole process of revival, who is going to try and resolve the state of insolvency. That person is selected from a panel of professionals who are qualified and registered, of course. So one such person will be selected from the list of insolvency professionals. Insolvency professionals, out of that, one person will be selected, and that person, if he gives his consent, just like we appoint auditors, we have so many members. so many chartered accountants who are in practice, who are eligible to carry out the audit. So we select one CA in practice. If he gives us consent that, okay, I'm ready to do your, take up your audit work or assignment, so we appoint that person as an auditor. Likewise, the same is going to happen here also. Okay, who does it, who doesn't, I'm going to tell you everything. So in the same manner, out of that list of person who are eligible, who are qualified, who are registered, that list of IPs, from that one person will be selected. He will be appointed as interim resolution professional for the time being, not the final one, but for the time being. Then what happens is a committee of creditors is formed. A committee of creditors, because if I'm talking about resolving the state of insolvency of a company, who are the persons I have to take care of? Of course, the creditor. Because company has to make payment to the creditors. Supposedly, there is a bank who has to take 2 crore from this company. And I, as some resolution professional, I am a professional who is going to resolve everything. I come and I say that bank, I am going to pay you 50 paise in a rupee. The bank might get upset. The bank might not be happy with the decision. So do you think banks should have a say in the decisions that I make? Because it is the ultimate, who is the ultimate beneficiary? It is the creditors. So creditors must be involved in this decision making about how you are going to treat the insolvency of a company. Right? So for that matter, a committee of creditors is being formed and they appoint the final resolution professional. After that, who prepares information memorandum, then they invite plans from prospective resolution applicant, that how the state of insolvency can be resolved. The plan is submitted to committee of creditors. Do you agree? Do you disagree? If you agree, then we will submit the same plan to adjudicating authority, and if adjudicating authority also agrees, then we will implement the plan and we will resolve the state of insolvency. If you don't agree, then we don't have a choice. Or if you agree and we submit the plan to adjudicating authority and adjudicating authority doesn't exist, we don't have a choice. So in that situation, we will go for liquidation of the company, because ultimately, if anyone has made an application under this IBC code, he must get some resolution. He must get some relief. That is important, right? So these are some short forms that have been used in the charts and they might help you. Okay, so now we begin with the actual thing, why this particular code has been, or why this particular framework has been made, is to handle the conflicts between the creditors and the debtors in a more efficient manner, because earlier also you had disputes, there were court cases. One company has millions of court cases running, not millions, it's too high, hundreds of court cases maybe against them. Now it becomes difficult for the judicial systems to handle as well as for the company to handle. So here what happens is, somebody has initiated CIRP, it's going to serve all the creditors. So it becomes better for them, right? It prevents a lot of business failure, because ultimately if this situation is not resolved, the company will run into liquidation. So if attempt can be made to resolve and revive the business, nothing better than that, right? So of course the code helps in a lot of manner, and wherever an enterprise defaults, the control of the enterprise is not going to stay with them. It is going to shift to basically the committee of creditors, who assess all the proposals and everything. Who assess the proposals and everything and try to revive the enterprise. If it cannot be revived, they are going to take it for liquidation. Okay, so my dear, we begin with our code. It is applicable to all the entities, that is the company which is registered under Companies Act, LLP, then any other body corporate, even the guarantors to the corporate debtors, right? Partnership firms, proprietorship firms, individuals also I spoke about, right? But we have to read about the corporates, which is given under part 2. We have some important definitions which I'm not going to discuss in this revision class, but I have told you the basic meaning of the terms as and when needed. I have already told you about the financial creditor, operational creditor, insolvency professional, the person who is enrolled as a professional. Okay, so let's begin our CIRP. Let's begin our CIRP. The first step is filing of an application. Of course, after the existence or commission of default, after that only application is going to be made. So if the corporate debtor has defaulted in payment owed to applicant or owed to any other financial creditor. That means maybe company has taken loan from a bank and company has also taken loan from other people. The company has repaid this loan, has not repaid that loan. So collectively, if it has not, if it has defaulted in the payment of amount to any financial creditor, then this application can be made either by itself or jointly with other financial creditors. See, one amazing thing I would say, which has been established under IBBI, or you can say under this particular code, is information utility. Information utility under IBC. Earlier there wasn't any information utility. Now we have India's first information utility, which is NESL. Okay, it is registered under IBBI. If you want to check out, you can check out its website. I was trying to quote that exact website for you. Yes, it is nesl.co.in. Okay, so if you want, you can check it. National E-Governance Services Limited. You will get that information utility. Now, what is information utility? Of course, it has some information which is stored. It has some information which is stored. See, if you talk about income tax portal, whenever you have AIS, I hope you all know about AIS, annual information system. Just like we had 26 AS when we were filing returns previously, we now also have AIS. AIS is what it is doing. It is tracing all the information from all the available sources and presenting it at one place, right? In the same manner, information utility is nothing but it stores information from different sources and brings it at one place, right? So a lot of people register their the banks are going to provide information and that information is going to be stored. So financial creditors definitely have this information under IU, that is information utility. So if let me try to explain you with an example. Supposedly I tell you that my TDS for financial year 2021 has been deducted 20,000. The amount deducted as TDS is 20,000. Will you believe me? Well, the answer is you might believe me, you might not believe me. But if I present to you a copy of 26 AS wherein financial year 2021 is clearly mentioned and the TDS deducted comes out to be 20,000, you will definitely believe me. Why? Because it is an extract which has been made available from a government source. Likewise, if a financial creditor makes an application to IBBI stating that somebody has defaulted in repayment, the adjudicating authority might not believe it, but if they attach that extract from information utility, they have to believe it, right? So they file an application along with the record of default. They suggest the name of resolution professional. So out of that list, they can select one resolution professional and any other information which is specified by board. Board here means IBVI. Okay, so they file an application to adjudicating authority. What adjudicating authority is going to do is within 14 days, they are going to either admit the application if they are satisfied that yes, there is default, the application is complete, and the name of IP that they have suggested to act as RP is clean. That means there is no disciplinary proceeding which is pending against that particular person. There is no proceeding which is carrying out, right? So he has not been involved in any such thing, right? So if they are satisfied, they are going to admit the application, and the date of admission of application is going to be treated as the commencement of CIRP, right? So this can be an objective question asked to you, what is the commencement of CIRP? Now, adjudicating authority can also reject application. When can it reject application? If it is satisfied that the default is not there, or the application is incomplete, or there is some disciplinary proceeding which is pending against the proposed RP. So they will give a notice to the applicant to rectify the defect within 7 days, and if rectified, then the application will again be admitted. If the application is admitted within 7 days, it is going to be communicated to the financial creditor as well as the corporate debtor. Corporate debtor might not even know that such application has been admitted by financial creditor, right? If it is rejected, then you don't need to intimate to corporate debtor, right? Financial creditor made an application. Directly you have rejected it, you intimate to financial creditor. But if you admit the application, now the process of insolvency is going to start. So you have to tell that company, you have to tell that corporate debtor that now we are going to start the insolvency resolution of your company. So you must inform them over here. Your information to them is not required. And if no order is passed within 14 days, you have to record reasons in writing for the same, that why is there a delay? Why is there a delay? Here, right? So shall we move further? Okay. Now this was about financial creditor. See, the important section numbers to remember. Financial creditor can initiate CIRP under section 7. Operational creditor can initiate CIRP under section 9. However, section 8 and section 9 both are for operational creditor. We are going to read them now. And corporate debtor himself can initiate CIRP under section 10. Okay, so these are three you can say important sections. And then we have under section 11 certain persons who are not entitled to make an application for CIRP. That means in certain cases you cannot go for CIRP. Okay, so about financial creditor we have already read. Now we are going to read about the operational creditor. Now operational creditor record will not be there in information utility. And I am a company, I have taken some goods from a supplier, from a vendor. I have not repaid their amount. In these operational transactions, there can be existence of dispute a lot of times. I wanted certain goods, you provided the goods of a lower quality, so I have not made your payment. You're not ready to take back the goods. You have provided me defective goods. You have provided me delayed goods for which I suffered losses. So a lot of problems can exist in such type of cases. And that's why maybe delay in the payment. So supposedly the vendor gave me goods which are not up to the mark or of the quality that I agreed to, and that's why I'm not making payment. Now the operational creditor goes to the adjudicating authority and tells that he's not making my payment. You initiate CIRP against him. It will be a waste of time. It will be a waste of time, because it's not so that I'm not ready to make the payment, that I'm not making payment because there is existence of dispute, right? So in such situation, the case is slightly different. What happens is, the code requires operational creditor to send a notice, a demand notice plus the invoice. demanding payment from the corporate debtor, and corporate debtor within 10 days has to either pay the amount or intimate about dispute, has to do either of the two things. If it does not do any of the things, then application for initiating CIRP can be filed. If there is a dispute which is in existence, that dispute has to be resolved. Payment, you cannot initiate CIRP over here, right? If the person has already made payment, you cannot initiate CIRP. If the person is not doing any of these, then you can initiate CIRP, and you can file an application. You will attach the copy of invoice, demand notice, affidavit that there is no dispute, proposed IRP. Here it is not mandatory to propose the name of IRP. The financial creditors know about IRP, they are in touch of IRP, but a vendor, we cannot expect him to propose some IRP or knows the name of any IRP. So here it is optional. You may propose. If you don't propose, the board, the IBBI is going to appoint one for you. Record with IU if available, certificate from financial institution that the debt is not, that is your bank records, other proof or any prescribed information. So you file an application for initiating CIRP against corporate debtor, and within 14 days, if the adjudicating authority is satisfied that the application is complete, you gave the demand notice. These are prerequisites. Under section 8, you read about the prerequisites. That means an operational creditor has to satisfy these things. Only then he can make an application under section 9 for CIRP against the corporate debt. So if adjudicating authority is satisfied that yes, demand notice has been given to corporate debtor, because that is a prerequisite which is given under section 8, so it has to be given first. And what will be the effect of the demand notice? That either the debt will be paid or the dispute will be given, or none of that happens, right? So if debt is not paid, then only you can make an application, and there should be no dispute of notice. So if AA, that is NCLT, is satisfied of that, and of course the proceedings, if any proposed IRP is there, there should be no pending proceedings against him, only then the application will be admitted. And the date of admission of application is the date of commencement of CIRP. However, if NCLT thinks that maybe application is not complete, or maybe you have not complied with the prerequisite under section 8, that means you have not served the demand notice to corporate debtor, or if you have served the demand notice, maybe the debt has already been paid off, or there is some notice of dispute which has been received, or there are some pending disciplinary proceedings against the proposed IRP, in that case NCLT will provide an opportunity to rectify the default within 7 days, and if rectified, application will be admitted. If not rectified, the application will be rejected. Clear? Now comes section number 10, initiation of CIRP by corporate applicant. The corporate applicant himself can also make an application for CIRP. Supposedly it thinks that maybe if we don't treat our insolvency now, we might run into liquidation, or we might incur some heavy losses. So it's better to revive our situation, and that a professional can do certainly better. So we want some professional to take over the management and try to resolve with a beautiful resolution plan. So corporate debtor himself makes an application to adjudicating authority. The same thing happens within 14 days if the adjudicating authority is satisfied that whatever name of IRP you have proposed, there is no pending proceedings against that person, the application will be admitted. If there are pending proceedings, you will be given an opportunity to rectify the default or defect within 7 days and resubmit your application. If rectified, application will be admitted. If not, application will be rejected. Clear? Okay. Once you have made an application under section 7, 9 or 10, 7 by financial creditor, 9 by operational creditor, and 10 by corporate debtor himself, corporate applicant. If you have made an application, can that application be withdrawn? See, if you make an application and the application is not yet accepted by the adjudicating authority, so you give the permission, no, I want to take back my, request for the permission, I want to take back my application, you can. If it has already been accepted, that means somehow the proceedings have moved to a next stage. Quite possible, till now you have not constituted that committee of creditors. So you don't need their approval. Only IRP can make an application and do it. If you have constituted COC or thereafter you have invited plans or all, then you require approval from COC of at least 90%. Okay, so then once you obtain the approval, within 3 days you will make an application to adjudicating authority, and adjudicating authority is going to pass an order for approval that yes, you may withdraw your application. So this can be a question which may be asked to you, that whether an application once submitted for CIRP can be withdrawn or it cannot be withdrawn, right? So it can be withdrawn. There are certain cases where an application cannot be made for CIRP, which is given in this section number 11. See, some corporate debtor is already undergoing CIRP, some operational creditor again wants to make an application. Arey Baba, the CIRP process is already going against that corporate debtor. So how another application? That will be multiplicity, na? How can we initiate CIRP against one corporate debtor by two different people? No. So that is not allowed. If supposedly CIRP was completed 6 months before only, and again you want to initiate CIRP, no. That is not possible. So give it some time, right? So if it was completed within preceding 12 months, if there was some CIRP plan which was approved, but the company could not implement and execute the same and violated it within preceding 12 months, then again you cannot initiate CIRP. And lastly, if already liquidation order is being passed for the corporate debtor, so you cannot initiate CIRP, right? So my dear, what is the flow? Application is being filed by either financial creditor, operational creditor, or the corporate debtor himself. Once an application is filed, it is either admitted or rejected. If it is admitted, that comes out to be the admission, or that comes out to be the commencement date, and from that commencement date within 180 days CIRP has to be completed. CIRP has to be completed. A one-time extension of 90 days may be granted subject to approval. So COC is going to by 66% votes in value, they are going to approve that yes, we want extension. Then RP will apply for extension to adjudicating authority, and adjudicating authority will grant an extension, but that extension cannot be granted more than once, and that too of 90 days only. Clear? Now, once your application is admitted, it marks the date of initiation of CIRP, and that has to be completed within 180 days. As soon as the application is admitted, there are three things which happen. Firstly, declaration of moratorium. Secondly, appointment of IRP. And thirdly, public announcement. What do we mean by moratorium? Moratorium means suspension of certain things. Supposedly, I am trying to resolve certain things, and at the same time more issues are popping up. It will be difficult to resolve. Likewise, if I'm trying to settle down the disputes between the creditors and the debtors, but some creditors are again filing cases against these people, it will be difficult, it will be impossible to resolve. So that is suspension of these things, which is moratorium covered under section 14, which tells us that on insolvency commencement date, AA, that is adjudicating authority, or NCLT, is going to prohibit that no new suit is going to be filed, no old suit is going to be continued for hearing during moratorium. So these all things or activities are going to be suspended. You cannot transfer any asset, you cannot dispose of any asset, you cannot create any new charge on that assets, you cannot let someone else recover the property which is in your possession at right now. Supposedly, the company is functioning in a building. That building is taken on lease from someone else. So he cannot take back the property right now, which is in possession of corporate debtor. Of course, if lease has expired, other terms are prevalent, right? So that cannot be recovered during moratorium. You cannot execute any order of court, and you cannot even enforce the action under SURFACI Act. But there are two things which will not be affected. One is supply of essential goods and services. So like electricity and all. So supply of essential goods and services will not be affected. And if the company had a telecom license, that license will not be revoked, because if that license is revoked, the company will not be able to function anymore, right? And when the company is not able to function anymore, how will the insolvency be revived, right? So that will be become difficult. So the license will not be revoked or suspended, and the supply of essential goods will not be terminated. Moratorium comes to the end once CIRP comes to the end. So during whole process of CIRP, there will be moratorium. Supposedly CIRP could not happen properly and the company had to turn into liquidation. So when it starts the liquidation, then also moratorium will come to end. Clear? So what is happening? Applications are being filed, application is admitted, then moratorium is declared, then IRP will be appointed, and after IRP is appointed, within 3 days, IRP will make a public announcement. So first of all, I'm going to deal with IRP. Who do you think should be appointed as IRP? When applications for CIRP were filed by financial creditor or the corporate debtor, they proposed a name. And when the application was filed by operational creditor, they also could propose a name. It was not mandatory for them to propose a name, but they can propose a name, right? So if they had proposed the name and no disciplinary proceeding is pending against that person, he will be appointed as IRP. Supposedly, operational creditor files an application and does not propose any name, then the matter will be referred to the IBBI. To IBBI, and IBBI within 10 days will suggest a name who will be appointed as IR, right? So likewise, the appointment of IRP is going to take place. Once IRP is appointed, within 3 days I hope it's clear, right? So within 3 days, he is going to appoint, he is going to make a public announcement. What will be written in public announcement? In public announcement, he is going to invite the claims. He is going to tell about the corporate debtor, that what is the name, what is the address, under which authority is this registered, I am the IRP, what is the last date by when you can submit the claims. If you submit a false claim, there will be a penalty, and by when CIRP will end. Okay. So he makes a public announcement with respect to that. Now, IRP is appointed, he has certain powers and he also has certain duties. What type of powers? He is going to take all the powers of board. He is going to supersede the board. All the officers, all the employees will now report to IRP. So he is going to take over the whole management of corporate debtor. He can execute deeds and documents, he can sign, he can take actions, he will have access to all the books of accounts, to all the records, all the, of course he has to comply with law, right, and protect all the property of the company. At the same time, he also has certain duties. What are the duties? He has to collect information about the asset. And as I told you, when he makes a public announcement, he is making public announcement for invitation of claims. So he also collects and collates all the claims. He verifies all the claims. The most important function is to constitute the committee of creditors. See, IRP has a very short tenure. From the insolvency commencement date till the appointment of RP, he might be appointed as RP also. and someone else can also be appointed as RP. So in the capacity of IRP, he has a very short tenure. In that tenure, he has to perform these duties. He has to take care of the assets. He has to file the information with the utility so that it's updated. He has to monitor the assets, and he has to perform the duties as specified. Manner of submission of claims, not so important, but you can remember the forms, that if you're a financial creditor, you have submit in form C. If operational creditors, submit in form B, and the employees and workmen have to submit in form D. Right? So they submit all the claims. IRP verifies the claims, makes a report, and provides it to adjudicating authority. Right? Now, application is filed, application is admitted, moratorium is declared, IRP is appointed, public announcement is made, then claims are collected, and committee of creditors is formed. Committee of creditors, my dear, under section number 21. So, after collation of claims, before collation of claims, you cannot actually constitute a committee of creditors. Why? Because you need to know who are the financial creditors. In the committee of creditors, we have financial creditors. We don't have operational creditors. Okay, but if supposedly there are no financial creditors, then we might have to include operational creditors only. Now listen to me. If you have these doubts that ma'am, their interest will be hampered, no such their interest will be hampered. I'm telling you. If financial creditors exist, then all the financial creditors will be the part of that committee of creditors. But if there are any related party, they will not have a right to say, they will not have a right to vote. Okay. If all the financial creditors are related party, then operational creditors will be the part of committee of creditors. And if there is no financial creditor, then also operational creditors will be the part of part of committee of creditors. In both these situations, the 18 largest operational creditors by value, one representative of workmen and one representative of employee, they are going to be the financial creditors. Supposedly we don't have 18 operational creditors, we only have 10 operational creditors, then all the 10 operational creditors will be the part of committee of creditors. So IRP constitutes a committee of creditors. If there are two or more financial creditors as a part of consortium, that means they have collectively advanced the money, then they both are going to be part of COC, and their voting will be in proportion to the amount that they have advanced. If a person is financial as well as an operational creditor, then his voting share will be determined accordingly in proportion to his debt as a financial creditor, right? And if he assigns his debt to a financial creditor, then again the voting will be accordingly proportionate. Now, once the committee of creditors has been constituted, within 7 days you have to conduct the first meeting of COC. Just like we have read about general meetings of shareholders or the board meetings, like that we also have the meetings of the committee of creditors, wherein a notice has to be sent. 5 days notice to every participant. 5 days notice to every participant. It may be reduced by COC to not less than 24 or 48 hours. Quorum has to be 33% in value. Then voting, all the votes have to be approved by 66% in value. If the quorum is not present, the meeting is going to be adjourned to just the next day, right? If it's a holiday, the succeeding day, right? If the quorum is not present even in the adjourned meeting, the members present shall constitute the quorum, right? In board meeting, if you remember, in general meeting, if you remember, you have read about that the board may decide about the adjournment. Here nobody decides about the adjournment because everything has to be quick. The process cannot wait, right? Okay. This point I have dealt in later also, so I'm going to tell you later. Now, what happened is, Application was filed, application was admitted, then public announcement, moratorium was declared, IRP was appointed, public announcement was made, claims were collected, they were verified, they were collated. Committee of creditors was formed by the operation by the financial creditor, comprising of the financial creditor or operational creditor, whatever the case be. After committee of creditors is formed, the first meeting takes place within 7 days, and after that, in the first meeting of COC, RP is appointed. Resolution professional is appointed, that is by 66% votes. Either you appoint the same IRP as RP if his consent is obtained, or you can also replace IRP. If you do that, you are going to send this application to adjudicating authority, who is going to forward to the board, and board confirms within 10 days whether to appoint or not to appoint, right? So RP is appointed. Now what IRP does? What IRP does? Okay. IRP has to conduct the whole CIRP process, that it, RP has to conduct the whole CIRP process. Whatever documents were available with IRP is going to hand over the documents to RP. RP also has the same rights and duties and powers as IRP. It has to manage the operations till CIRP ends or the liquidation order is passed. He has to conduct the meetings of COC. In the first meeting, he is appointed, so subsequent meetings he, of course, conducts in the manner specified by board. And he also has certain duties as are given in section number 25, and he also prepares information memorandum. Information memorandum. See, information memorandum contains that relevant information. What happens is, we have certain eligible resolution applicants. What is the main motive? We are conducting CIRP. So we want someone to come up with a beautiful resolution plan how this company can resolve. But unless we have the details we require to formulate a plan, we cannot provide a plan. So information memorandum basically contains the relevant information which is needed by every resolution applicant to make a plan, which also contains the details about the compliance of law and like things, right? So these are their duties. During CIRP, if at any point of time COC finds that no, we don't want to continue with this RP, they can by 66% votes resolve and propose a new RP, obtain its consent, forward the name to AA. It is going to forward the name to IBBI, and IBBI is going to confirm that no disciplinary proceeding is pending, so he shall be appointed. If it is pending, then board recommends a name. Okay, and he shall be appointed. There are certain duties or actions which are subject to approval also under section 28. Certain actions which are subject to approval. But I'll not deal in detail, but once you just go with the flow. See, resolution professional undertakes all the duties, it has all the powers, but there are certain things for which it requires the approval of committee of creditors. Just like when we read about a company, the board has powers, but the powers of board, section 179, they're also restricted. Certain powers require approval of shareholders, right? So the same happens over here also. If you want to raise any, I don't think I have included that section 28 in the chart. So you read it on your own. Anyways, if you want to raise any interim finance, that means already you have so much of loan. Now you want more loan, you want to raise some interim finance. You cannot raise it on your own. You need to go and take the permission from committee of creditors. If you want to create any security interest, if you want to delegate any authority, if you want to undertake any related party transactions, right, if you want to make some changes in some contracts. So there are certain things which are given in section number 28 for which you require approval. Otherwise, you have to protect the assets, you have to take control of the assets, you have to exercise right for corporate debtors, you have to file application for avoidance of transactions, chapter 3. You have to maintain a updated list of claims. If you are unable to understand this, I'm going to tell you later, don't worry. You can appoint, if any professional you need. You have to represent in corporate debtor in third party dealings, and you have to perform other actions as specified by board. So these are all theoretical things, right? Now what happens, the next important step is that inviting resolution plans. You have provided, you have prepared information memorandum, right, and that includes all the details that are needed to formulate a plan. So there are certain resolution applicants who are the persons who are not eligible, are given under section 29A. Of course, it doesn't have to be someone who is related or someone who is not competent. A person who is disqualified to become a director cannot be a resolution applicant. Someone who has been prohibited, that you cannot trade, he cannot be a resolution applicant. Someone who is convicted on offense, or someone who is disabled under some foreign law, or some connected person, or someone who is insolvent, right, or promoter. So all these people are not going to be eligible to be the resolution applicant. Other than that, if you are eligible, then you can submit a plan. You can prepare, you can formulate a resolution plan, and you can submit the same. So resolution applicant, on the basis of information memorandum, they submit a resolution plan plus affidavit of eligibility that yes, I'm not disqualified to be a resolution applicant. They submit the plan to resolution professional who examines the plan, because all the plans has to conform to section number 31. They have to conform to certain standards. Same, the whole CIRP process involves a lot of cost. Maybe you have to spend 5 lakh rupees in this cost, paying the fees of RP, paying the fees of IRP, other administrative type of expenses. So whatever plan you are formulating, that should ensure that these costs are also met. It should ensure that you are not contravening any law, right? Now, so resolution process cost should be provided. How you are going to manage the affairs of the company after this plan is approved? How are you going to implement the plan? There should be no contravention of law, and it should conform to the guidelines of IBBI. Now, this point will clear a lot of air. Ma'am, when we were constituting committee of creditors who is going to be involved in all the decision making, you said that the operational creditors will not be included unless we have to necessarily include them in the absence of financial creditors. Otherwise, financial creditors will be the part of committee of creditors. So, supposedly 5 financial creditors form the part of committee of creditors. Now, a resolution plan is presented before them which says that all their debts will be paid off, but the operational creditors will have to make compromises. They will immediately sanction the plan. They will say, yes, let them compromise and we are going to get our money. So wouldn't it be harsh on part of operational creditors? Yes. Why operational creditors are not included in the committee of creditors is because they do not have that adequate sense and knowledge about the finances. Point number 1. But that doesn't mean that their rights will be compromised. So whenever a plan is being made, Resolution professional at its first place ensures that that plan should provide for their debts first. Ma'am, if all their debts will be provided, it will again be very difficult, right? So, their debts have to be provided for. Supposedly, I say that, okay, their debts have to be provided for. So, maybe the financial creditor will say that, okay, if we have to pay them 10 crore of rupees, let's pay them 1 crore only. And the resolution plan conforms to the standard that we have also provided for operational debts. You get my point? So this is also not going to be work, and this might also be harsh on them. So what the code says, what IBC tells us is that it is mandatory, it is necessary that whatever resolution plan is being presented, it should provide for the debts of operational creditor at least to that amount that they would get if the company goes into liquidation. So today, if we wind up the company, we sell all the assets and we pay off the liabilities, what will they get? At least they will get 4 crores. So at least 4 crores should be there in that resolution plan, so that there should not be any injustice to operational creditors also. So if all these things exist in the plan, then that plan is going to be presented before the committee of creditors. They can either approve the plan or they can reject the plan. Supposedly they approve the plan, then just a second. This does not happen. There is adjudicating authority. Supposedly they approve the plan, then it is submitted to adjudicating authority. Submitted to adjudicating authority. Adjudicating authority might approve or reject the plan. Okay, it might reject the plan or it might approve the plan. If it approves the plan, right, now it's good to go. So the plan is presented to committee of creditors. Committee of creditors can approve the plan or they can reject the plan, right? If they approve the plan is going to be approved by at least 66% in value vote. So if they approve it, then the plan is submitted to adjudicating authority, and if they also approve it, then the moratorium comes to the end. You have to now implement the plan, and the plan is going to be applicable to the company, to government, everyone. You cannot say that the plan is not going to be applicable to this person or that person, right? Yes, of course, the person who is not satisfied can appeal on certain grounds to the adjudicating authority. Now, if supposedly COC rejects the plan, then we don't have a choice. It is going to run into liquidation. If supposedly COC approves the plan but AA rejects the plan, then also it's going to run into liquidation, right? So we don't have time. What can be the other grounds on which liquidation may start? If the plan is not submitted within the time limit, if the COC resolved that no, COC at any point of time found out that it is futile that we are undertaking the CIRP process, nothing is going to happen, it's better that we wind up the company. So CIRP passed a resolution by 66% votes that let's liquidate the company. So it will go for liquidation. If corporate debtor contravenes the plans and someone appeals that they are not following the plan, then it will come to an end and the liquidation order will be passed if the resolution plan is rejected, as I already told you, right? Rejection of resolution plan, that is something that I've already told you. So in all these cases, the process of liquidation, my dear, starts. The process of liquidation starts. So the plan, if approved, is going to be applicable to the corporate debtor, its employees, the members, creditors, guarantors, all the stakeholders, and even government or any local authority which is involved. The moratorium comes to the end, and the resolution plan is going to be implemented. Clear? Clear? I think so far the things are clear. If anyone wants to appeal, they can appeal if the approved plan was in contravention of law, or RP has not been regular in his exercise of powers or has misused his powers, the operational creditor's debts has not been provided for, CIRP cost has not been provided for, or the plan doesn't comply with any criteria which is mentioned by IBBI. So on these grounds, appeal can be made. Then comes the process of liquidation. The process of liquidation. See, the main motive of the code is to resolve. That is why it is known as CIRP, that is Corporate Insolvency Resolution Process. However, if the attempt to resolve the insolvency of a corporate debtor fails, then only the liquidation process is triggered, and as soon as the liquidation process is triggered, you have to first appoint the liquidator. Right? So far the proceedings were being conducted by the resolution professional. Now the proceedings will be conducted by the liquidator. So who is going to be appointed as the liquidator? IRP. RP can be appointed as liquidator also, provided he gives the consent. If he does not give the consent, then someone else will be appointed as liquidator. See, as soon as the order of liquidation is passed, that means now the company is going to be dissolved. All the assets will be sold, the liabilities will be paid off. That means it is a deemed notice to all the employees that you are no more needed. It is your termination, right? So it is a deemed notice of discharge to all the employees, etc. Liquidator is appointed. Resolution professional will act as liquidator if he gives his written consent, and he shall have all the powers of board of director or KMP, and personnel, that is the employees, they have to extend the assistance to liquidator. If, however, the plan was rejected because it could not meet the requirements as given under section 31, then if RP was proved to be incompetent in the CIRP process, how can you expect him to be competent in the liquidation process? So in that case, he will not be appointed. If the board recommends that we want some RP to be replaced for reasons in writing, then he will not be appointed. Or if IRP doesn't give his written consent, not request but consent, so he will not be appointed as liquidator. Okay. So in these cases, how the liquidator will be appointed? Adjudicating authority will direct the board to propose a name, and within 10 days, the board, IBBI, proposes a name with his written consent, and such person will be appointed as liquidator. What is liquidator going to do? He is going to verify the claims, invite the claims, settle the claims. He shall take into custody all the assets, protect those assets, carry on business if needed, until when needed, sell the property by auction, transfer, or any other manner. He can make negotiable instruments. He can take out in official name letter of administration to deceased contributory. I've explained this particular point in the class in detail. Obtain professional assistance if needed. He can institute suits just to file, to recover money and everything. He has to investigate affairs with respect to undervalued and preferential transactions, which I'm going to tell you right now, to take all the actions, to sign the documents, apply to adjudicating authority for necessary orders or other specified function. Now, liquidator will have the access to all information from information, utility, books of accounts and everything. And if the creditor asks for information from the liquidator, then liquidator also has to provide financial information to them within 7 days. Now, liquidation estate. What do we mean by liquidation estate? See, there is a company. What are the assets will be treated? What are the assets which are going to be included in that consortium, and what are the assets which will not be included? So, of course, the assets which corporate debtor has ownership rights, any encumbered assets also, all types of assets, whether tangible, intangible. If there are some decisions, there was some suit pending for which court has declared that yes, this asset belongs to the company, so that asset will also be of the company. If there is some asset which has been recovered through proceedings during CIRP proceedings, that assets also, assets which are collateral. See, whenever there is a creditor, secured creditor, supposedly he has two choices. He is a secured creditor, he has some asset. He might enforce his security interest or he might let it go. If he enforces his security interest, supposedly he has a loan of 10 crores and he has an asset as a collateral security of say 8 crores. So he has two choices. He can give this asset back, right? And or he can enforce that security interest and realize his money. In both the cases, if company has more money, it will be paid. Supposedly the creditor chooses to sell that asset and realizes money. Now he will be paid the differential amount of 2 crores at a very later stage. The order of preferential payments, that unpaid portion of the secured creditor, comes at a later stage. But supposedly he lets go of his security interest. Now he will be paid here. All that 10 crore rupees. If the company has 100 crore, he will definitely get his 10 crores. But if he chooses to sell off the security interest, he might be get the unpaid portion, or he might not get the unpaid portion, unrealized portion, right? So he has a choice to make. If he lets go of his security interest, then that asset will also be included. The proceeds of liquidation, of course, and all the property that belonged to the company at the commencement. What will not be included? Supposedly I have a building which is on lease, so it does not belong to corporate debtor, it is just in the corporate debtor's possession, so it will not be included. Collateral which is held by the financial service providers, that will not be taken. As I told you, as I gave you the example, if it is relinquished, then that will be taken. Personal assets of shareholders, assets of Indian or foreign subsidiary, or other as may be specified by the board. So once the liquidation proceedings start, within 30 days, liquidator will collect all the claims with the supporting documents, verify the claims, and can admit the claims or maybe reject some claims. If you reject, then the person has the power to appeal also, that why you have rejected their claim. One person has submitted the claim, they can change their claim within 14 days of submission, or they can withdraw also. Now, after the liquidator has collected all the claims, it is going to check for preferential transactions, undervalued transactions, extortionate credit transactions, and apply to adjudicating authority accordingly. After that, liquidator will sell off the assets and pay off the claims. In what order you have to distribute the assets or pay off the claims? First of all, you will provide for the cost, and secondly, you will provide for these two things: debts of secured creditor, if they have relinquished their security interest, of course, as well as the workman's dues for past 2 years, 24 months. Okay, so if the money is not sufficient to cover both, they will be paid proportionately. The third stage is wages other than workmen for past 12 months. Then financial debts to unsecured creditors. See, The unpaid portion, if a secured creditor enforces a security interest, then the unpaid portion comes even after the unsecured creditor. So it's sometimes better to let go of the security interest, so you will be paid here, otherwise you will get the unpaid portion at a later stage. So it depends what amount of asset you have as collateral. If it is sufficient to cover your dues, then you should enforce your security interest, otherwise you should let it go, right? So amount due to central government, state government, and this remaining debts and dues, then preference shareholders, and at the last equity shareholders as well as the partners. So liquidator is going to distribute the proceeds when all the assets are liquidated. Liquidator is going to make an application to adjudicating authority for dissolution. Right? So I hope so far the things are clear. We have some preferential transactions. Preferential transactions may be the the management had some idea that the company might run into liquidation, so they repaid certain amount to a related party or to a non-related party when the company was not in a very good position. So that transaction looks like a preferential transaction, so the money will be taken back from them, right? RP is going to apply, liquidator is going to apply to adjudicating authority, and those deemed preferences will be reversed. So order will be passed accordingly. Likewise, you also have undervalued transactions and extortionate credit transactions. I think so far you must have understood the whole process. The amendments in IBC as well as a very important portion of PPIRP, that is pre-packaged insolvency resolution process, is there in another video. Please check that out, very important for examination point of view. You can expect certain questions from them. So you check out that, it is in the other video. You can of course increase the speed of the videos and watch it at your own pace. I don't teach too fast or too slow just to maintain that pace. Of course, I understand that your exams are approaching, so you don't want any time to be wasted, but at the same time, you can increase the speed. I cannot be too fast, for I have a lot of students to match up to. Now, apart from that, you also have fast track insolvency resolution process, and you also have voluntary liquidation, very small topics. I think you can just read them, just 2 pages, and do it on your own. That's it, my dear. I'm winding up the IBC session here itself. Hope you would gain that understanding, and of course make full use of these charts. You can incorporate other points on your own to make this chart a more comprehensive one. Thank you and all the best.